The Ondas Holdings Inc. OMDS stock is currently trading at $7.07, reflecting a strong intraday gain of plus 13.06% as of the market's latest tick. This isn't just a daily blip. This double-digit jump is the market's immediate, palpable response to a multi-layered strategic shift. But the real story isn't the percentage. It's the underlying signal of a pivot from a pure-play industrial wireless provider to a major contender in the rapidly expanding autonomous systems and defense sector. What most investors fixate on is the recent massive Q3 revenue increase and the raised guidance, which are certainly compelling. But the hidden value and the reason for the intensity of this current upward momentum lies specifically in the company's decisive and quite aggressive deployment of capital following a significant financing event earlier this year. This latest surge is less about organic growth and more about the market suddenly validating a significant, high-stakes acquisition strategy designed to completely reshape the company's long-term revenue profile, particularly within the counter-UAS or counter-drone market, an area that has become a critical, immediate spending priority for governments globally. The general belief, particularly among those who have tracked the stock through its historical volatility, is that Ondas is primarily a low-volume, high-risk microcap focused on the niche market of private industrial wireless networks for rail and utility companies. Their Ondas Networks segment, with their FullMax platform, has been the reliable, albeit slow-moving foundation of the company for some time, securing notable contracts like the one with BNSF Railway. That expectation is now being aggressively challenged by the reality of the company's recent actions in their Ondas Autonomous Systems division. The market is being forced to recalculate the value of Ondas Holdings after its recent $225 million acquisition of Sentrycs Ltd., an Israeli-based counter-drone technology firm. This move, finalized just yesterday, is the most direct and clear indication yet that management is pushing the throttle on transforming the company into a defense and security asset. Coupled with the simultaneous announcement of an $8.2 million purchase order from a major European security agency for their Iron Drone radar systems, the expectation-reality gap widens considerably. Investors who still see this as a slow-moving wireless player are missing the forest for the trees. The stock is reacting to the emergence of a high-growth, high-margin defense technology contractor. The trading volume today reflects this realization. It's far above its 30-day average, indicating a sudden rush of conviction buying from institutional players who are adjusting their models to this new, higher-growth narrative. The daily stock swing for Ondas is exceptionally sensitive to news flow, a characteristic of smaller companies navigating high-potential markets. We saw a similar, though less sustained, jump following the Q3 earnings report, where they posted $10.1 million in revenue, a staggering 580% increase year over year. While operating expenses remain high, a sign of aggressive spending on growth and acquisitions, the sheer magnitude of the revenue acceleration and the simultaneous raising of 2025 and 2026 revenue guidance has shifted the risk calculation for many. The company's 2026 revenue target of at least $110 million, with an eye toward achieving EBITDA positivity in the second half of that year, is what's truly holding attention. This provides a tangible benchmark for future performance and suggests that the period of pure cash burn for growth may be time-bound. Institutional activity has reflected this optimism, with a significant increase in institutional ownership quarter over quarter, even as the float has experienced dilution due to recent equity financing. For a speculative, growth-focused name like Ondas, seeing firms like Vanguard Group and Hood River Capital Management increasing their stakes, as Fintel data suggests, provides a key vote of confidence that individual brokerage accounts looking to invest online might interpret as a bullish signal. When we break down the fundamental business, Ondas Holdings operates through two primary segments. The Ondas Networks segment is the older core business, focused on mission-critical industrial Internet of Things solutions for regulated industries like rail and utilities. Their Ondas FullMax platform uses a licensed spectrum to provide secure, high-capacity private wireless data networks. This is a crucial high-barrier-to-entry market, but it is one with slower sales cycles. The Ondas Autonomous Systems segment, which includes the Aerobotics and now the Sentrycs acquisition, is the high-octane growth engine. This division designs and sells autonomous drone systems for surveillance, security, and data collection, with a particular focus on counter-UAS solutions. The Sentrycs acquisition is a perfect example of strategic integration. It brings cyber over RF technology, enabling the soft-kill controlled takeover of hostile drones, a sophisticated capability that pairs perfectly with the kinetic interception capability of their Iron Drone radar systems. The combination of these technologies creates a multi-layered defense solution that is proving very attractive to European and domestic security agencies facing the escalating threat of unauthorized drones near critical infrastructure, like airports. For a moment, let's consider the competitive landscape. For individual investors who use platforms like Robinhood for stock trading or Fidelity for their investment help, Ondas doesn't compare easily to the giants like Tesla stock or Apple stock, but within its niche, it's fighting well. On the network side, they compete with established hardware and systems players, while in the autonomous systems space, they're up against companies that have focused exclusively on defense technology. The difference is their unique full-stack approach. They control the aerial intelligence, the ground base station, and the connectivity backbone. This integrated system is what they are monetizing through a subscription and service model alongside hardware sales, which is key to generating the recurring revenue analysts value. However, the path to profitability remains challenging. High operating expenses, largely driven by R&D and integrating acquired companies, continue to generate losses. The postponement of their special meeting of stockholders to solicit additional votes, while seemingly minor, points to the critical importance of ensuring shareholder alignment on key operational and financial matters needed to support this aggressive growth and acquisition strategy. These are the kinds of administrative details that can trip up a small-cap stock trying to execute a massive pivot. Looking forward, the future outlook for Ondas Holdings is tied almost entirely to the execution of the AOS segment's defense contracts and the successful integration of Sentrycs. The expectation is now set. Significant revenue acceleration driven by defense and security spending leading to profitability in 2026. The reality check comes from the risks inherent in this highly regulated space. Government contracts, especially international ones, can be complex, delayed, or canceled. Furthermore, the share structure is sensitive to financing activities, as seen by the recent equity funding that led to dilution, a constant concern for growth stocks burning cash. The opportunity, however, is substantial. The global market for counter-drone technology is projected to grow exponentially, and Ondas has strategically positioned itself as a provider of a sophisticated, proven solution at a critical moment. If they secure more large-scale government contracts and successfully transition the Sentrycs technology into mass deployment, the current analyst consensus, which places a price target around the $9.69 mark with a high of $13.65, could prove conservative. The recent upgrade by Oppenheimer from perform to outperform with a $12 price target underscores this growing optimism. For those of you who engage in online investing using tools like the Schwab Intelligent Portfolios or are self-investing through an individual brokerage like Interactive Brokers, this is a stock that requires constant attention to market news and SEC filings. It's not a set-it-and-forget-it type of investment. The tension between the high-risk, negative earnings reality and the explosive growth potential is palpable in the day-to-day trading. The stock's high volatility is a feature, not a bug, of a company in hyper-growth mode within a nascent industry. In closing, the central insight today is that the Ondas Holdings stock is rapidly shedding its legacy as a niche wireless network vendor. The old expectation of slow, steady industrial growth has been shattered by the reality of a strategic, well-funded push into the lucrative and high-stakes autonomous systems and counter-drone defense sector.